you get a Jim McMahon rookie card. The funky quarterback, whatever. I hope you guys are having a good time this morning. We are going to kick it off right now. It is October 28th. We are still in the midst of Halloween week. We have daylight savings coming up, thank goodness. And I'm very worried that Indiana's going to lose to Maryland football. So instead of going to see that game on Saturday, I think I'll just sit in my house and not do anything as I mull over whatever decision the central bank makes tomorrow. Good morning, Peter, J.H. Camp, B.S. Smokey, Stardust, Eric from Northport. Good to see you. It's 40 degrees here in Maryland. Yeah, so we're adjusting as best as we possibly can. A little cool. On top of that, we want to make sure we say hello to... There it is. I couldn't find it. Roberto, Jerry, Jeff in Houston. Hey, Jeff, what's going on, man? Good to see you. All right, let's dive in. Again, why do we do this? Well, it's like college. We teach economics and finance before 9 o'clock in the morning because apparently we're trying to keep it a secret. It is at 9:30 with a day like today, like tomorrow and Thursday, you will be the exit liquidity if you are not prepared. So, again, we're going to talk a little bit about momentum in a moment. Momentum remains strong. We talk about those 5 stocks we talked about yesterday. We're going to highlight this because, again, if these names sell off tomorrow, we're going to look for a reversion pattern on names like ARK Invest, Micron, NVIDIA, AMD, but we have to be patient and we have to let the market come to us. We'll also dive into our top screens, look at our top stocks of the day, and of course, at 9 o'clock, you will get access to, where are you, Charlie? The runner. Momentum, very positive, 13. A lot of chop, but okay. Here's what we're looking at right now. Where is the weakness in this market? It remains primarily in the same places that we have been discussing for the better part of a month. It's still in the private equity side. It's in the names like Blackstone. It's in the names like KKR. Look, they're not getting killed and dropping 15%, but they're selling off very gradually. Blackstone lost a 0.5 percentage point yesterday. And when we look at these names, all we are really seeing is just kind of a slow, quiet burn lower. And that's not good. It's not good to see one of the largest, one of the largest financial asset managers. I almost got BlackRock stuck in my head. Right, real estate, everything that comes with it. They had that little bounce off oversold, but the pattern has continued, lower highs and lower lows. URI, United Rentals, is weak. Why? Well, once again, big run up like we saw with gold, and then just, again, taking the escalator up, elevator down. On the other side of that, you have names like Netflix that have been weak since their earnings as well, and Equifax is under pressure as well. But on the other side, hey, YOLO, Robinhood, just squeezing higher. There's that nice little pop that we look for, that 8 on that 20-day moving average. Tesla's strengthening. NUE is strengthening. How is that even possible? Well, remember, Nucor is in the steel business, and you got that little turnover here, $7 move on top of that. And then, of course, AppLovin, which sounds like McLovin, which means I won't trade it just because they named their company that. All right, momentum across the board. S&P 500, NASDAQ, IWM, all looking positive. Number of stocks breaking out versus breaking down, positive. But a lot of sectors are still weak. Industrials are weak. Materials are weak. Gold and silver's obviously still getting beaten up. Everybody's panicking. I'm looking for a bottom in gold and silver soon, so keep bringing it. More selling. Keep selling. Get it down to 3,400. I don't care. I'm going to buy more of it. I'm waiting for silver to bottom out. I'm waiting for gold to bottom out. And what am I paying attention to? I'm watching the miners, GDXU, right? I'm looking for oversold on the RSI and the MFI. That will bring exhaustion. And then I will likely be back in this trade relatively soon. But this is a pretty steep overreaction. This is what happens when you get caught up in the moment. We had a great run up. And again, it's a reminder that if you are trading in anything, to keep very close attention to the 20-day moving average because not a lot of good things happen under it, and especially under the 50-day. This is down 50%. The leveraged ETN, which means the GDX, is down about 13%. Not good, but it will find a bottom and it will create a trade, and we're going to be patient. And again, let the market come to us. On top of that, healthcare improving, technology improving. Good to see technology coming back because that's where the money is. Utilities are weakening a little bit, real estate weakening a little bit. Energy is kind of in no man's land. But for right now, the number of stocks that are breaking down is very, very low. And the number of stocks that are elevated are strong. The Russell looks good right now. We had this elevated period of selling pressure for the better part of a month. It's really cooled off. So people are now repositioning ahead of this Fed meeting. And of course, that's the big story today. Stocks and index futures held near record highs as traders brace for a busy week. We've got tech earnings tomorrow. Don't forget that. So we have the Fed meeting tomorrow and today, but the Fed decision tomorrow at 2 o'clock. Jerome Powell will speak at 2:30. Well, and then what? Well, the earnings calendar absolutely blows out. And it actually starts today because, again, Visa reports after the bell today. United Health Group reported this morning. Booking Holdings, which is like a $166 billion company, they're reporting. American Tower reported this morning. NextEra Energy. So you've got some good names here. You especially have some good names around momentum, particularly Royal Caribbean, which reported this morning. But tomorrow is the bigger day because Microsoft, Meta, and Alphabet all report at the exact same time. That is the big story. There are two names that I'm watching tomorrow morning that I think are more critical to the current state of affairs in the U.S. economy, and that is Caterpillar and Boeing. They are both pre-market. Verizon reports tomorrow as well. And then Thursday, you have Apple and Amazon. Pay attention to MasterCard as well, which reports in the morning, Thursday morning. Two, the other name that I want you to pay very close attention to, and this is a little bit out there, Altria. Altria has been a very strong income play for the better part of 2 years. It's gone from about 50 up to 65. But right now, are Americans smoking? I know that sounds like a crazy question, but if there's a cutback there, that's an economic symbol. It's a vice. Pay attention to the vices. In addition, Coinbase will report Thursday afternoon as well. We're citing everything. Look at us, Reuters. Tickers in play today, the SPY, the Qs, Microsoft, Apple, Google, Meta. Trade the reversions. Trade the moves on the 3 and the 8. The 3 and the 15-minute charts. Pay close attention. Will earnings, especially the AI-driven, justify their lofty valuations? That is the headline story. The question, of course, is where we sit with liquidity, which we'll discuss in a moment. How dovish is the Fed? Again, I think we should be at 50 basis points tomorrow cut, but nobody listens to me. Any hint of surprise tightening could stall the rally. Big question is not how much are they going to cut interest rates by, but if they formally announce that they are ending quantitative tightening, which has been brought down to about $5 billion roll-off per month. My argument, they should have done that a while ago. Oil prices, well, they're chopping around right now. Oil was up on renewed geopolitical risk in the Middle East and concerns around supply chains. XLE, CVX, we wrote about the OILU this morning. The OILU, again, is your gauge. And right now we are stuck in no man's land. What we're looking for is some sort of pop above that 50-day moving average to give us continued momentum. We've had a couple of nice moves on the OILU, and where does that reflect? It reflects in the energy SPDR fund. So we had a little bit of a pop. We've rolled back over. I'm going to tell you right now, don't try to force an energy trade today. Just hang out, wait, and see if a trend emerges in the next 2 to 3 days. These are the situations where we wait, we see a big headline, and then all of a sudden we try to act. Look, not doing something is just as good as doing something in some scenarios. Don't do anything. Wait for a clear trend to emerge in the next 2 to 3 days in the EMP space. Again, there's a lot of noise right now. We're looking at supply disruptions, whether or not they're real. Does this boost energy stocks or choke off risk appetite elsewhere? Well, again, technology would be the thing that is under pressure more than anything. Dollar was sliding a little bit this morning. Treasury yields eased as markets increasingly price in an end to Fed tightening. And again, what does that mean? Okay, so back in 2008, after the Federal Reserve, Ben Bernanke. Ben Bernanke was a student, is a student. He's not gone. He's still here. Ben Bernanke studied his entire life the Great Depression. And if you don't believe that, he will tell you. Ben Bernanke, played by Paul Giamatti in Too Big to Fail, pointed out that the biggest problem with the Great Depression was a deflationary crisis, and there was a lack of liquidity in the financial system, meaning there wasn't enough money sloshing around. So his suggestion was, hey, what if we just drop money out of a helicopter? Oh, I didn't know you could do that. Well, in 2010, he got on 60 Minutes and he said that with a keystroke, they increased the balance of capital that the Federal Reserve had. That money then moves through the banking channels and ultimately ends up in your hands so that you can buy eggs. Now, the price of the dollar will be debased as it finally gets to you, but they don't tell you that. That said, the money that moves through the system ultimately ends up being, well, the goal is inflation. They started inflation targeting in the 1990s. They started quantitative easing in 2008, 2010. They've had multiple rounds of it. The goal is to prevent a debt deflation crisis. Now, why does that matter? It matters because when you do it too many times or you put too much capital into the system, that creates inflation. And it gets very, very bad for people who are running for government because they say, wait a minute, are you telling me that the bond market is the reason that I won't get elected? That was Bill Clinton in 1994. Yes. So inflation hit 9.1%. So what did they do? They started to, take that money that they had injected into the system. Quantitative easing is where the Fed puts money into the system and buys bonds. Why do they buy bonds? To reduce volatility in bonds, to reduce the interest rates linked to bonds, to prevent our 10-year bond from going to 14% where it should be. But what they ultimately do then is they start to let things roll off. They start to tighten, which means they effectively stop injecting capital into the system and they let the bonds that they purchased either roll off or they reduce their balance sheet through open market operations. We were at $9 trillion on the Fed balance sheet back in 2021. We're around 6.6 right now. That said, it is causing a little bit of chaos in our regional banking system because we only have about $3 trillion of reserves right now. Now, I said all of this just to, talk about monetary policy at 9 o'clock in the morning because apparently that's the only thing I'm good at. Let's take a step back. No, that's true. Okay, good. So really the core thing here is if that tightening stops, the question becomes, is the Fed going to actually go back to QE? Will they actually start injecting capital back in to help reduce the stress in the reserve system and the regional banking level? And people will say, well, there's no way that's going to happen. I'm going to tell you right now, it's probably going to have to. And if that happens, here's the key thing. Quantitative easing is extraordinarily bullish for equities. Look at the charts going back to 2008. Every time that we have engaged in QE, the S&P 500 has done quite well. So if they are reducing their tightening, now the question is, will the market start to front run expectations of QE or some sort of intervention in our regional banking system to prevent our SOFR, our overnight lending rates in the repo market from exploding? That's the big story. And CNBC is not going to talk about that. U.S. dominates capital flows among Fed and liquidity concerns. U.S. continued flooding into U.S. assets. Well, that's funny because every time we do engage in QE, the S&P 500 goes up and people from all around the world pour into our assets. Why? Because our bonds are stable, because the leverage is ample, and because all of the money that is printed Again, I got to stop using that word or else people in Australia will get upset with me. Anytime that they engage in open market operations at a very large scale, investors from around the world pour into U.S. equities because that QE, that effort, those open market operations, that leverage is bullish for U.S. equities. They're not going to invest in their local bonds, and they're not going to invest in their local equity markets. They're going to pour into the only game in town. And the S&P 500, U.S. markets, were 33% of global markets in 2013. They're 72% now because foreign investment keeps pouring in. So if the Fed signals an end to QT or new liquidity support, and baby, it's coming, risk assets would get a further boost. On the flip side, any surprise tightening or liquidity shock would spook flows. But I'll just tell you right now, for the next 18 months, the United States is the only game in town. S&P 500, we're going to 7,000. We might go higher. We might hit 75 next year. Capital pushes markets higher. What drives equity markets? Money, liquidity. That's Stanley Druckenmiller. That's Michael Howell. And you can quote me if you want, but I'll just be in the other room kind of standing behind Don screaming at, like that guy in the fight. Yeah, I told you. And they're like, you want to fight? No, whatever. All right. Hey, let's get into the runner. All right, JP Morgan. Look, again, I keep saying all the time, if I only get one stock, I only get one banking stock, just one. TFSL is the number 2 on the list, but JP Morgan really is number 1. It is the financial system. They are the beneficiary of QE. They are the broker-dealer. They wrote Dodd-Frank. They have access to everything. And it just is going to keep climbing. It's not going anywhere. It's actually at a pretty good trajectory right now. And I will say this. If we engage in QE, once again, here's your reminder, the United States is a financialized economy. So when we engage in quantitative easing, it benefits our banking stocks. China's different. China is a manufacturing economy. So when they pump money, copper prices go up. Manufacturing benefits. That's the difference. That's the financial system today. And now, with JP Morgan coming off that 820-day moving average, I am coming in, not off the top rope, might go through the bottom rope. But I like just trading into this. Again, JP Morgan's already reported earnings. I think it's clean. I think it's simple. It is expensive to go out even 3 weeks right now because of the sheer amount of expected move built around the Fed meeting. If you go into the 302.50 call for next week, it's at 6:30. So market's expecting a 2% move to that side. If you then add the other side, right, the at the money, that's $10. That's a 3% expected move for JP Morgan. So how do you trade it? What's the cleanest way to do it? Well, again, it's going to cost you a little bit of money. But I think that if you just simply stay in the money and stay down around that key support level, you look around that 300 level for next week. That's at 775. Okay. So what do you do instead? If you just simply sell the 305, this trade, and I want to read these numbers out because it's actually pretty attractive. The entry cost is $292 to buy the 300 and sell the 305 for next Friday. It will cost you $292. Your max return is $208. Max return expectation 71%. Your probability of profit is 56%. But if you do a trade like this, and what's interesting about it is that your break even for this will be 302.92. So that's a 40-cent move to the upside. If you want a higher probability of profit, go deeper into the money. Go to the 297, which calls 295 or 995, and then sell the 302, because this is an interesting situation because it actually anchors to your 20-day moving average. The 297.50 will cost you $9.55. The 302.50 will cost about $6.25. That's $332. Your maximum return is $168. That's a 50% target. Your probability of profit is 63, and your break even is 300. It's got to break under 3 key moving averages for you to lose. Just pointing that out. If you hit 301 next Friday, and that's where you settle out, you're still up on the week. But right now, where this stock sits, this stock can basically do nothing today, tomorrow, and you will be flat. It's where you get into next week, Monday, Tuesday, Wednesday, Thursday, Friday. And if you stay above that 303.50 level, you can make 50% on your money. Once again, those strikes for next week are the 995, are the 297.50 and the 302.50. November 7th. Once again, the math behind it, 50% risk on return on risk, probability of profit, 63%. Uber. This is a Gianni stock. That's a nice looking chart. Pretty simple. You're looking for 100. It's not that complicated. You're looking for Uber to hit 100, and you're going to play defense as well. Same type of strategies, same type of risk management. If you buy the 95, and you could do it for this Friday for all I care, the 95 for this Friday, and writing, you could write the 100. You could also just write the 99 because you're getting up into that range. 95, 99 call for Friday. 50% probability of profit, so it's one direction. 124% target. 178 to make 222. And what's nice about this, again, is your break even is right back at the 96.78. So where we are right now, you're using the leverage of the market. Instead of buying 1,000 shares, or 1,000 shares, 100 shares of the stock at and spending 9,684, you can put up 178 to effectively aim to make the same type of return that you would be targeting in a short duration trade. That is the 95 call for this Friday and the 99 call for this Friday. Buying the 95, selling the 99. And once again, by using the spreads, it allows you to keep a tighter stop in place. So again, if you look at the way that this is setting up today, if this stock hits 96 today, you're down 10%, you can cut the position. If the stock hovers at 96.60, it will not be losing money until Thursday. So you got a little bit of time. Bring it down to that 15-minute chart. I mean, that momentum is just ferocious right now. You might want to even keep your stop back here on the 20-day adjusted EMA, which is a 300-minute chart. Very clean. On top of that, KTOS. KTOS. Hello. Hi, Kratos. You're the best. Great stock. Great company. Buy the dip. Buying the stock. Look, I don't have much here as far as options chain. It's not that it's not terribly liquid. There usually is a pretty wide bid-ask spread. This thing is a dream. It is a pure momentum stock. I was in it earlier this year at 30. It burned all the way up to 70. I exited once we tapped right here. But I like I still love the thesis here. And you can see we're starting to turn on that MACD. We want to see some oversold on the MFI. But buying the stock, 90 on the 90 on the stop, looking for a revisit of that 106.50. Finally, CCJ. Well, I guess we're doing uranium again. One of those days. Look at that thing. Oof. Well, maybe don't chase this. I did not know when I put this together at 6 o'clock in the morning that Caneco and Brookfield had announced a transformational partnership. Transformational. Man, that's high praise. I'll look at CCJ later today when we are in the room at 3 o'clock. I'll see if we can do a spread to the downside. But look how transformational this is. It's so transformational that the stock popped 17%. LH to the downside. We're looking for things to go the other direction. Well, healthcare is still positive. I will point that out. But LabCorp did not have a good earnings report. That said, I want you to pay very close attention to the 30-minute chart. I'm not going to try to short this. What I'm going to instead try to do is look for weakness that the MFI and the RSI on our 30-minute chart both go oversold. And if they both go oversold, I'm looking for a short-term reversion. On the 3-minute chart, well, that is not a good-looking thing. Again, 280 took us down to 274 yesterday, and now today, 268. Look for a reversion if you're using volume-weighted average price. There is a possibility here. You want to ensure that the IV and that the implied volatility, the cost of options gets out of the way before you start trying to bet on any type of reversion. But yeah, this thing got absolutely smoked. B, which is pretty cool. I wish that I could just have one very simple ticker that is one letter. Barrick Gold Mining, this thing's just getting killed, as is all other players in this space. What do? Wait till it gets under 30, that 50-day moving average. If it gets under that 50-day moving average, buy whatever is at the money and look for weakness to the downside. Gold's getting beaten up. Again, I'm still bullish gold over the long term. I look at the last couple of weeks and I kind of shrug because, as I said, my price target for gold this year was 3,500. I didn't think it was getting to 4,500. It did. So now all the excitement, all the overreaction continues. It is what it is. I'm not going to start selling gold because I own a lot of physical and I have to pay 6% to the U.S. government and or state of Maryland, and I also don't want to have to pay ordinary capital gains. My baseline will end up being somewhere like 2,800 if I do that. So I'm going to stay in the shiny stuff. I'm long silver. I'm long gold. I'm looking for oversold conditions on the GLD, the GDX, everything that comes with it. I'm patient. I don't need to trade this right now. I can wait. I could sit back. I could build cash. And once again, I'm going to tell you now, it's going to 5,000. It's just a matter of time, and you just have to be patient. And we had a massive move here from September to October. That's where the frenzy kicked in. That is how this stuff works. It's very behavioral. I'm still content, and I'm still in the back of my head thinking, okay, I bought it at 2,100. It's worth 3,500. I got to get through the year on the additional gold that I purchased, so that way I am at not getting crushed on the tax side. But that said, I think, what is it, 33% no matter what? Thanks a lot. Terrible, terrible tax laws. Howard Hughes. Momentum improving. Real estate play. I don't trust this, but chart don't lie. RSI, 57. MFI, 52. MACD, improving. ADX, positive. Pushing above that 820 split. Well, let's just go for it, right? Let's just go for it. Let's just be greedy as a pig on something like this and just play pure upside. Let's put $100 down and let's gamble, right? No sense trying to get cute with the way that the spreads operate. It's bouncing off that 8-day moving average. What can I do into November? November 21st, calls are currently on the 80, are about 410. This is a limit order bet. You're going to need to put something in around 420, 430 to get filled. Again, $2. It's a bet. It's a bet. If you want to, buy the 80, sell the 85, but it's a very wide spread. There's not enough movement here for me to try to do anything too chaotic, too crazy, but I do like this, the way that this is structured, and I do like the way it's setting up, and I can definitely see a move back to 86 relatively soon. And finally, ReRe and GSL. Well, it's good to see that our natural gas shippers are getting back in play. Thank you, Greeks. We need to be back above that 22.55 level before I touch it, but I will just buy the stock. I like the fact that, again, improvement all across the board, MACD, MFI, RSI, and ADX all turning positive and pushing above these key levels. Buy entry 29.50, exit 33. Finally, re. I don't even know what this is. Sounds like real, but it's not. It's AT Renew Inc. This is a Chinese consumer cyclical. Oh, China, you're the best. I love these stocks. I love this momentum stuff. It's just gunk. I don't even know if this thing even exists. This company probably operates out of an elementary school 4,000 miles from Shanghai. But you know what? It's momentum. 420. Buy. Buy. Buy the stocks at the stop back here around $4. And look for a hopeful move back up to the 480 level. Last stock in the list, not on the chart, but there's my boy Weibo. My favorite momentum stock that is not Carnival Cruise, 1161. We need to push back above that level. I want to see this 8-day sweep back under that 20. And then we're going to be long some communication, internet content stocks in China. Let's get weird. All right. We've got 3 minutes left. I know you guys have a lot of questions because I just went into pure monologue mode today. That's what happens when you stay up watching baseball all night. It is what it is. Minnesota Mike, thank you for joining us today. I really appreciate it. Who likes inflation? Sellers. Who likes inflation? Buyers. Paraphrasing Milton Freeman. Should have kept a Florida address for half a year and a day to save on your taxes. No, because I really don't like getting in trouble. I hate paperwork, and I hate getting letters in the mail that say, "Hey, sir, you might have broken the law." I don't like that. So I'm not going to do that. You're quoting Pitbull, Secret Agent Charlie? Like the Cuban singer? It is what it is. All right. So why is the video display window very small today? Is it just me? I don't know. Let's see. Other questions. Don's talking about baseball. Don doesn't. So, okay. All right. 1 second. One moment. Let's see. All right. So, we got 2 minutes. And this story is for Don. Okay. I went to this Friday. We are going to, obviously, it's Halloween. I'm not going to be here for the morning show on Friday. Blake's going to fill in. It's going to be awesome. It's probably going to be better than anything I've ever done. But I am dressing up as Russell Crowe from Gladiator. Now, for those who don't know, this is a movie about Russell Crowe being really intense and sweaty for like 2.5 hours. And his character's name is Maximus Decimus Meritus, which sounds like a name you'd give your Wi-Fi network. Let's just refer to him as Russell Crowe, okay? So the movie starts, and he's doing something really cool in a forest. He's fighting these dudes who don't like Rome very much, and he's really good at it because he's like friends with the Roman emperor. And he's played by a guy who looks like a philosopher or Keith Sutherland's dad. Guy totally loves him. Then there's this other guy. His name's Commodus, who's the emperor's kid, and he has got major issues. Like, imagine your sibling was jealous because he got the last slice of pizza, but instead of the last slice of pizza, it's the Roman Empire, and he wants you dead. So Commodus gets salty because the emperor likes Russell Crowe more than he likes him. So in this classic movie, Commodus does something really shady. He kills his dad with a pillow. And then he takes over the empire. And the father was fine 5 minutes ago, and no one challenged this, but it's blatantly apparent that Commodus committed regicide. So Russell Crowe's like, dude, not cool. But Commodus isn't having it. So the next thing you know, Russell Crowe gets betrayed, and his family's unjustly killed. and he is now a slave, and he goes from the top general to being a slave. So like, talk about a career change, right? And it's really poorly explained because even though he's a top general basically on Earth, no one except for the guy with this weird lip realizes that it's him. So he ends up in these gladiator games, which are basically just ancient Roman version of USC, but with more swords and fewer tap outs. And he screams, single columns, which is awesome. And then he says things that end up on crappy dorm room posters like every man dies, but not every man truly lives. It is, of course, a Ridley Scott movie. But then in the arena, Russell Crowe becomes like this big deal. He's got this whole "Are you not entertained" catchphrase that people really like. So he makes some friends, probably because he's really good at not dying. And then Commodus is still being this jerk now with just more emperor duties, right? So anyway, there's also this subplot with Commodus' sister, which is this weird tension with Russell Crowe, but it's all dramatic and soap opera. But I think they dated, but that's not really explained either. It's just sort of implied. The climax, and I'm going to go really off hearsay here, involves a big showdown in the Coliseum. Commodus, being the sneaky guy that he is, tries to cheat, but Russell Crowe fights him anyway. And they have this epic battle, and Russell Crowe wins and also gets injured, and he dies in the end, but not before everybody realizes that he's the real hero. Cue the epic music, the teary eyes. He was a soldier of Rome, the sister woman says, and then they carry him off while leaving the brother on the floor of the Coliseum. So, in a nutshell, Russell Crowe is a dude who goes from hero to zero, back to hero again, all while wearing a lot of armor and shouting motivational stuff like single columns, strength and honor. So that's my costume for Friday. I will leave you for that. I hope that that was the highlight of this show and not the 15 trade ideas that we came up with. I hope everybody has a great day. It is 9:22. Don's coming up in a moment. We are going to do some trades. I'll be back at 1 o'clock. We got some special event coming up at 2 o'clock as well. I'll be back at 3:30, 3 o'clock. Tomorrow, I'm going to carry you into the Fed meeting from 3:30 all the way into the earnings reports that follow as well. I hope you guys have a great day. Alex, I appreciate that. I have not seen Gladiator 2. I will go and do that right now. Have a great day, everybody.